Welcome to ShortView Trading. This is your morning market hit for Wednesday, the 8th of April. What matters today for traders? Well, it was an impressive start for the S&P 500 and US markets yesterday in Tuesday's session, as they rallied in initial trading hours by some 3.5%, up towards and close to their 50% Fibonacci retracement level. As you can see in the chart of the S&P now, and indeed of the Nasdaq Fibonacci levels, both indices touched or came close to that key 50% retracement. But despite that strength and that follow-on through from Monday's strong session, both indices sold off sharply into the close and closed down on the day, albeit only mildly. Added to that, it was interesting to note that volumes were again quite light, albeit stronger than they were during the 7% rally on Monday. But you can see with the chart in front of you now, in recent trading sessions, the volumes have really been pretty light in general, compared to what we had in the panic sell-off. What's interesting to note here is a number of our short-term 1 to 2 week models are back on sell or thereabouts. So the stocks above 10-day moving average indicator is back on sell. Our technical scoring system is back close to those levels, added to which there's little downside protection in portfolios now. That downside put option protection's been taken off in recent trading sessions. As such, markets are much more vulnerable to the downside now. And as highlighted in the last few days, if we follow that typical roadmap and pattern of the great stock market crashes, it's around about now or the next few trading sessions where we should expect markets to start rolling over. As articulated yesterday, there plenty of stress remains in the financial system, and whilst there was a bit of easing in one or two indicators overnight, there was a flaring up of stress in the Italian spreads over German government bond yields. They've widened on the back of disappointment that the Eurogroup yesterday didn't reach any agreement on sharing and mutualisation of the burden of the fiscal stimulus in response to this crisis. So our view remains very much as per yesterday: buy on the rumour, sell on the fact, added to which stock market crashes have three waves. The first wave of panic, the second wave of relief, and the third wave, a wave of selling, the demoralisation wave. For the full detail on how we're approaching these markets on the next 1 to 2 weeks, please see today's daily rag available to subscribers and on the website. So what are we watching today? Well, macro data is very light. In terms of key events, there's some minutes out from the recent Fed meeting, and we continue to watch for all those factors we've been discussing in recent days. That is, any signs of further stimulus from policymakers, the degree of financial stress in the system, whether it's easing or tightening, and indeed the price action of markets and how it plays out from here. So that's it from us. That's your morning market hit for Wednesday, the 8th of April. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and/or Twitter. Thank you.